direct dealers have, guys, for us on the Fed information? What did they have for us? Were we perfectly positioned, yes or no, guys? Take a look. Direct dealers on the inflation desks bid up bonds this afternoon. Remember? They bid up bonds this afternoon. The macro seems to be more balanced, of course, so not a lot of insight. The buying did suggest a lower CPI print. So we will see if the knob's steepener through the London Open to buy into this as a narrative. Is that what we said last night at 11 o'clock? Yes or no? Absolutely. Do you see what they did in the bonds? You see what they did in bonds? How did we know that this was going to be a buy trade before the numbers came out, guys? How did we know it was going to be a buy trade before the numbers? Come on, guys, it's dead obvious. It's visible on that screen right there in front of you on the 10-year Treasury notes. Yep, they swept the buyers off the book, didn't they? They swept the buy stops because people had started to buy into this here. And then just before the numbers, do you see what they did? Just before the numbers, they swept the buyer stops. You see it? They swept the buyer stops in there on that sweep just before the number came out, which took out all the buyers. Well, it took out a lot of buyers, gave somebody a great chance to buy some low-priced bonds, and the market went straight up, and that was my exit. I just thought, that's it. This is going up. This is going up exactly the way the direct dealers had suggested it would. We're getting a great price, guys. I mean, we'd been big sellers from the top edge, but we got a great price, and we were good enough to walk away and say thanks very much. Hence the reason why we've got the big circle at the bottom edge. Now you may be saying, but that insight, guys, that insight, how did you get that insight? Well, we tell you that the one market that's the most important market once every single week, once every single month, that is going to be the big signal for us, isn't it? So I asked the guys last night, what was your view? What was your view of last night's market? Let's take a look at last night and let's see what your view of it is. Let's see if you had an idea, guys. Take a chance, take a look at it and see if you can see what we saw last night, guys. This line is what we call the direct dealers line. Why do we call it the direct dealers line? Because it's only the direct dealers that are basically involved in this line. There's nobody else. Nobody in the retail space is really involved in this line. So the only people that are involved in this line are direct dealers. This line is a positive correlation to bonds. Is there anybody last night into the close, and we told you to look at this line into the close, is there anybody in this room that doesn't think that's a bullish buy-side opportunity in bonds? Is there anybody that doesn't think that buying bonds is the right trade at that stage? What do you think? It's absolutely spot on. It's the 5-year inflation break-evens, Andy. This is what we call the 5-year inflation break-evens. And every single month, we tell you guys, on the day before the CPI print, to get your inflation break-evens, 5-year inflation break-evens, get your 5-year inflation break-evens up to date on the right-hand side for a closing bell on the day before CPI. Yes or no? Do we tell you that, guys? Yes or no? Just for the guys coming in, obviously, they want to know if this is something we always ask you to check out. We ask you to check out the 5-year inflation break-evens on the day before's close. Because obviously we want to know what they know from the Fed, right? These are the only guys that are speaking to the Fed every single day on the New York Fed desk. This isn't ambiguous. Ambiguous. This isn't ambiguous. This is crystal fucking clear. The buy trade at the cash open on the opening call was here. Massive buy trade at the open. The buy trade into the closing bell was huge here. Two massive buy trades, telling me that the direct dealers last night are adding a bid to the bonds. Therefore, can everybody agree that my tweet is accurate? Can everybody agree that my 11 o'clock tweet last night is accurate? Bonds, direct dealers on the inflation desks bidding up bonds this afternoon. Well, that's what they were doing. It's not a Nostradamus look at the markets, is it? It's just an observation that every single one of you guys can do. It's exactly that observation. 5-year inflation break-evens. That the direct dealers are bidding up bonds into the close. That means they think inflation's going to miss its print. Now, the only challenge we had in this was that we had a contradiction. The back end of the curve was very bearish. Yeah, but a back end of a curve would be very bearish if we've got a low print. Yeah, but we've got to put it into context about what's happening on the 2s10s curve, and that's where the contradiction came in. We had a conflict on that. Therefore, what I said to the guys in the room this morning is, we can trade both sides of bonds. We can sell high prices and we can buy low prices. Did I or did I not say that to everybody on the bond desk this morning? Yes, I did. I don't have to wait for a reply because I bloody well know I did. We can sell bonds and buy bonds today. But obviously we're selling bonds because of the curve at the top edge and we're buying bonds because of the inflation break-evens at the bottom. But if I have to put a bet on, which direction the inflation numbers are going to come out, I'm going to be putting a bet on that they're going to miss because of the CPI number, because of the inflation break-evens 5-year. So when I saw that sweep coming into the numbers itself, when I saw the sweep coming into the numbers, I thought, nope, not a chance, guys, that's it. When it came into the numbers here and I saw that sweep on the stops, I thought, that is it. That's going to be a buy trade all day and all night right there. That is going to be a buy trade. As soon as they swept that low price, you knew it was going to be a buy trade. If you're fast enough to get into it, congratulations. You've just made yourself a reasonable profit of $2,000 plus a little bit of change. If you didn't get into it, absolutely fine. No problems. It is what it is. But that was absolutely a beautiful opportunity to buy into. And obviously, a bad CPI print is going to be what? It's going to be good for equities. So we know it was going to be good for equities. So we'd already just chatted about what the equity price was doing. And obviously, if we look at equities, we'd already just had this chat about this very bullish narrative in equities. Did this ever break structure on the sell side, yes or no? Did equities ever break structure? No, because the price that broke structure was this leg higher here. So structure low was way, way down here. So the only trade you could be doing is to buy into this equity, isn't it? So if we're going to buy into equities, what do we replace a cap seller with? Remind me, guys. What do we replace a cap seller with? A pending buyer. So who replaced this cap seller with a pending buyer, guys? Yes or no? Who replaced this cap seller here with a pending buyer here? And then when the price trades down, you've got a choice. You've got a choice, haven't you? You've got a choice to make as to whether you want to take your chance on the CPI numbers based on the direct dealers, or whether you simply don't want to take the gamble. If you don't want to take the gamble, guys, that's not a problem. There's not a problem with not taking gambles on data. It's a choice you make, right? But obviously, if you miss the break, you're not going to be in it. So you obviously had a chance to buy into that as a gamble, and let's not imagine that it's anything but a gamble, guys. But is it educated based on the based on the 5-year break-evens? Is it an educated gamble that the price is going to go up? We tweeted it at 11 o'clock last night. We tweeted it at 11 o'clock last night that the direct dealers thought that the CPI numbers were going to be poor. And obviously the upshot from that trade is actually quite good, because obviously you got a reasonable pop and you've went from a low price of 26s down into the 36s. You've just traded at 42 handle for 60 points and $3,000 of upside potential. Remember the buy trades? Look at all those buy trades. Remember this idea of getting 2 contracts in this and running it for as long as you can? Does that not all line up now, guys? There's the storyline of the direct dealers, the storyline of the momentum, the storyline of structures, the storyline of pullbacks, the storyline of narrating your charts, the storyline of perhaps having the confidence to run. Does that not line up with a possible trade that you could have potentially have done in those areas? Now, as I said, I'm not going to complain if you didn't do those trades, guys, because it is a gamble. It's nothing but a gamble. But the gamble has a probability on it. Look at what happened to the NASDAQ at the beginning of the gamble. Do you see what happened? Since the bottom edges of 12 o'clock, the NASDAQ YM have been going straight up. What does that tell you about interest rates? What does that tell you about interest rates, guys? If the NASDAQ Dow Jones is going straight up, interest rates are likely to be weaker, right? So if interest rates are likely to be weaker, what would that suggest the CPI number is likely to be? CPI number is likely to be weaker, correct? So when we see this NASDAQ YM rising, coming into a CPI number, would you not start to link the two together and say to yourself, you know what, that actually makes sense now in terms of its macro. The direct dealers thought the CPI number was going to be weaker. The guys that are actually putting live money on this are thinking this price is going to be weaker. I've got a chance to buy a bottom edge print into a pending buyer's level with a bit of aggregation. So a little buy reversal perhaps at 37.5 would be a reasonable proposition. Did you get lucky? Remember, I don't use stops, so I'm not going to get stopped out at break even, right? I'm not going to get stopped out at break even. I'm not going to be that guy. I'm just going to be buying back into this again if I had the chance. But obviously when it rips, it's gone. There's no way you can get filled until you've already given away most of the gain. Take your chance, guys, if you want. If you don't, I get it. I understand. It's not for everybody. But everything that was pointing in that chart at that stage suggested that you should be buying equities, buying bonds. Does everybody agree with that?